Hello everyone. In this lecture video, we will be going to talk about the variable costing, in particular the product and the period cost. Variable costing is a method of inventory costing in which all variable manufacturing costs are included as inventoriable costs. All fixed manufacturing costs are excluded, meaning to say, when we are talking about variable manufacturing costs, these are the capitalizable costs, and all fixed manufacturing costs, these are all considered to be as an outright expense. In comparison to the absorption costing or the traditional costing, it is a method of inventory costing in which all variable manufacturing costs and all fixed manufacturing costs are included as inventoriable costs. That means to say that inventory absorbs all manufacturing costs. Under both variable costing and absorption costing, all variable manufacturing costs are inventoriable costs, and all non-manufacturing costs in the value chain are period costs and are to be recorded as an outright expense when incurred. Let's try to have a summary on the key differences between the absorption or traditional costing and the variable costing. For the prime cost, which includes the direct materials and the direct labor, for both absorption and variable cost, they are product cost, same as with variable overhead. For the fixed overhead, in the absorption costing, it is a product cost, but in a variable costing, it is a period cost. And for both absorption costing and variable costing, the variable expenses and the fixed expenses are to be considered as period costs. Under variable costing, fixed manufacturing costs are excluded from inventoriable costs and are a cost of the period in which they are incurred, whereas under absorption costing, fixed manufacturing costs are inventoriable and become a part of cost of goods sold in the period when sales occur. Let us have an illustrative example for the product cost and period cost. The production data of ABC Company are as follows. Standard production cost is 4 million. The actual production cost is more than 200,000 than the standard cost, meaning to say it is 4.2 million pesos. The production in units is 10,000 and the sales in unit is less than 2,000 than the production, meaning it is 8,000 in units. We are required to compute for the cost of goods sold and ending inventory, assuming that all production costs are considered to be as product cost and period cost. If you're trying to solve for this kind of problem, keep in mind that management accounting uses the standard costing system. Hence, the computation of unit cost is based on the standard cost. If we will go back to our given, the standard cost here is 4 million and we will going to use the production in units of 10,000 units. So we will going to compute for the unit production cost is equal to 4 million pesos divided by 10,000 units. That will be equal to 400 pesos per unit. We have here the cost of goods sold. We can compute it by multiplying the number of units sold. In this case, that is 8,000 units multiplied by the standard cost of 400 pesos per unit. 8,000 multiplied by 400 pesos. For the product cost, that will be 3.2 million pesos. And for the period cost, that will be 0. Next, for the ending inventory here, since we have here the total production of 10,000 units and the quantity sold is 8,000, therefore, if we're going to use a T account for the inventory, during the production, our inventory will have a tendency to increase. That will equal to an increase of 10,000. Then we will go into sell 8,000, meaning to say in terms of the units, we will going to have an ending inventory of 2,000 units. Then the 2,000 units here, we will going to multiply it by 400. We will going to have 800,000. And because the ending inventory is not yet sold, meaning to say it is still in the product cost, 800,000. For the operating expense, we can have an understanding here that this is an outright expense. This is a period cost. Then we will going to multiply the 10,000 that is based on the production multiplied by 400. We will going to get 4 million pesos as part of our period cost. Then the total cost as accounted here, that will be equal to 4 million product cost and 4 million period cost. Remember that under variable costing system, the entire 4 million is deducted as an outright operating expense and no amount is deferred to inventory. That's the end of our introduction lecture video for the variable costing. Thank you all for watching.